In this video, we are going to look at Dividend Aristocrats. If you're new here, consider subscribing. We have some great content coming up. Today's aristocrat is Walgreens Boots Alliance Inc., ticker symbol WBA. Walgreens Boots Alliance is a global pharmacy and health and wellness retailer. It has two reportable segments. The first is pharmacy and healthcare, which includes retail pharmacy services in the United States and wholesale distribution of pharmaceuticals in the UK. The second is retail pharmacy, which includes retail drugstores and healthcare clinics in the Boots Alliance international markets. So they operate in two different markets. They operate in the US and they operate in international markets. Let's move on to our first metric, which is fair value. We want to determine if WBA is trading at a fair value. And we do this by looking at two different financial health models. The first is based on historical financials, and the second is based on industry financials. So let's start with historical financials. In order to use this model, we need two things. We need the company's historical financials, and we need the company's future financials. We already have the historical financials, which go back 5 years. But what about the future financials? Analysts expect revenue to grow by 2.7% next year, and by 1.2% the year after that. And earnings per share are expected to grow by 7.8% next year, and by 9.6% the year after that. And here's what we find. Using a discounted cash flow model and a 10% discount rate, we get a fair value of $42.37. Using a price-to-earnings model and a 10% discount rate, we get a fair value of $42.06. Now, what does this mean? It means that Walgreens Boots Alliance is potentially overvalued by 11%. Now, if we compare this fair value to the current price of $38.55, we see that there's an even bigger discrepancy. There's a 9% discrepancy, which means that Walgreens Boots Alliance is potentially undervalued by 9%. Now let's move on to the second model, which is based on industry financials, and we'll use the discounted cash flow model. Again, we'll use a 10% discount rate. Using a 5-year average industry growth rate, we get a fair value of $40.65. Now what does this mean? It means that Walgreens Boots Alliance is potentially undervalued by 15%. So now let's take a look at the dividend. The current dividend yield is 4.39%, which is higher than the 5-year average dividend yield of 3.87%. Now let's look at the payout ratio. The current payout ratio is 57.38%, which is higher than the 5-year average payout ratio of 52.77%. Now this is not a good sign, because it suggests that the company may be paying out too much of its earnings in the form of dividends. So what do you think? Let me know in the comments below.